Hello, good morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hirimat, and along with me, Cheryl D'Souza. Let's get a move on and check out what the headlines are saying today. 11,500 has been reclaimed on the Nifty. The Pharma Index, no doubt today, spearheading the charge. Whether you want to look at Sun Pharma, Dr. Reddy's, Cipla, they're all up in trade, really soaring this morning. Now, DRL particularly is one worth a mention. It's at a lifetime high. It's currently settled a patent litigation in the US over Revlimid capsules. Dr. Reddy, as a result, has gone to life high. It's a cancer drug, the one we just spoke of, with a $7.5 billion opportunity, which Dr. Reddy's will now launch in FY22 March. It should accrue EPS of around 50 rupees in the first full year, and then 90 rupees in FY24. So that's clearly got the street very excited. Then moving forward to two more pharma stocks that are in focus, Cipla and Lupin. An Albuterol boost seems to be on the cards. And both are in focus as Perrigo recalls Albuterol inhalation. So that's something to keep an eye out for as well. We then have a US lawsuit on our hands this morning, unfortunately. We have HDFC Bank receiving two lawsuits from overseas firms, so that's got that counter in focus. These are issues that had been brought out before, but they seem to be, advancing. Finally, this morning, as far as headlines are concerned, we have an agri boost on the cards. There's been some changes to the agri bill, and that's got the entire sector in focus. Cheryl.
All right, thank you, Varun, for taking us through the headlines, and that's the headlines this morning. But here's a quiz question for you. And how well do you actually know the markets, and can you spot the big trends on the Dalal Street? Participate in these three trivia on the Twitter. We will disclose the answer at 11:45. But to know what the question is, for the benefit of the viewers, here is the question for today's trivia. And if you had bought me exactly 10 years ago, you would have made 48 times on your investment. Who am I? And the options are Astral Poly, Bajaj Finance, Avanti Feeds, and Garware Technical Fibers. So quickly log on to the Twitter, participate in the trivia contest that's going on the Twitter. All right, and that is the quiz question for you. 11:45 is when we will disclose the answer for that quiz. But let's take a look at what the markets are doing today. And markets are actually gaining on a Friday morning, and this is boosted by the pharma stocks. Dr. Reddy's has hit a record high level today. If you see what the market benchmark indices have done, 0.3% is what Nifty is higher by. Sensex is higher by about 0.2%. Pharma index, biggest boost for the markets, higher by about 4%. You have Dr. Reddy's that is jumped almost 9% in trade today. Apart from that, you have Natco Pharma. That particular pharma counter is surging in trade, 20% up move. Natco Pharma, as per agencies, the sources are saying that Natco Pharma is likely to launch the in US the drug Revlimid before Dr. Reddy's, and that's the boost that that particular counter is getting. Apart from that, you have Cipla Health, you have Sun Pharma that are also gaining in trade today. So that is what the market is looking like. But the biggest drag on the Nifty this morning, Varun, is HUL. It's down about 1.5% or so. But Pharma definitely clear rally and clear winner in today's trading session.
Right, Cheryl. If there's one direction you want to look for today in the market, it's definitely pharma that's leading. You have some large cap financials like Bajaj Finance and Finserv, which are down today, which are being a bit of a drag. So yeah, as far as positivity is concerned, apart from maybe some select small caps and mid caps, it's definitely pharma today that's leading us upwards. So no surprise there that we're going to have 2 or 3 pharma stocks in our BNSN stock cloud for this morning, which my producer should just be bringing up on your screens. We also have some banking names and some hotel names, but let me begin with HDFC Bank on the back of those 2 lawsuits. So just to give you some background, the Rosen lawsuit and another firm relating to HDFC Bank's vehicle book mispractice, that has now officially been launched as a Class A action lawsuit in the US. So we'll see if it has any impact on HDFC Bank or not, but that's got that counter in focus. We then have EIH, which is a lot of hotels are on the rebound, obviously, and then we're looking at possibly a rights issue in EIH at around 65 rupees rupees per share. So that's got that counter in focus. We then have Cipla, Lupin and Dr. Reddy's. We've already mentioned in headlines the reasons. For Cipla, it's an Albuterol recall, which is turning into an opportunity for them, and Lupin as well. And for Dr. Reddy's, it's some new launches. Then we have TVS Motors, which has struck a new partnership, which is very exciting. We also have a Vedanta, which is approved, rather approaching SEBI on getting some further clarifications and permissions for the reverse book building for its delisting process. So that's pretty much what's comprising the cloud this morning. And I think with that, let's now go and talk fundamentals and technicals with our two guests. Kunal Bothra and Sharmila Joshi are now with us. So good morning and welcome to you both. Thanks for taking out the time as always. Kunal, coming to you first. Obviously this morning is all about pharma, and that's what's really moving for us. But what's on your radar as far as the high risk and low risk idea of the day is concerned?
So yeah, I think pharma, of course, is doing extremely well. So good morning, Varun, first of all. And I think a lot of the pharma stocks have just about gone to, I would say, busy kind of a rally. Stocks are up 10%, large cap names are up 10%, and that's giving a booster shot to many of these other laggards as well. So I think I think it's a sign of maybe a synchronized move into the sector, into the stocks. But then it becomes very difficult to try and initiate buy calls from a trading perspective when a stock is up 8-10% odd, because then from a trading perspective there could be multiple conundrums which could probably happen, that the stocks are overbought. They could go through a more of a time-wise correction, and whether the rally would probably continue into these names or not. So I think keeping that sector aside specifically, I'll pick up two separate names. One from the auto pack, and I'm picking up M&M as the first buy. I believe that stock is looking quite attractive on the low risk category, more of a stable charts, trading about those 600, 640 levels quite consistently over the last couple of days as well. So that's what I've kept as a first buy. Targets of 680, stop loss at 625. The second is a buy more on the high risk category, and that's one MGL, Mahanagar Gas. Now, the stock had seen correction of more than 20% from its previous major swing highs. So then on the hourly chart pattern, MGL is now forming an inverse head and shoulder pattern, and this could be a turnaround pattern for a stock like MGL. We've seen IGL also picking up pace already in the last, I think, 1 week, 10 days or. So I believe on the back of this, I for one believe that there could be a very strong revival and very strong rally, which will probably come back into names like MGL. Hence a buy, placed it at a high risk category over here. Short-term targets to be kept at almost 975 to 1000 range, and stop loss to be kept at 900.
Those are the calls coming in from Kunal.
Hi Sharmila, what's on your radar for high risk and low risk?
Yes, so I think let me go with the high risk idea first. I'm going with M&M Financials. Really speaking, we've seen very good data for the tractor space. The month-on-month numbers look very encouraging. The only risk that I perceive really is that going forward, the entire financial space could be under a bit of a cloud post the Supreme Court judgment on the whole moratorium issue and interest on interest, etc. So that could put a bit of a spanner in the works. But I think the fact remains that their rural presence is strong where M&M Financials is concerned. And one of the sectors that they cater to, which is tractors, that's been giving very good numbers. Two-wheelers are also giving good numbers. So I think this is a stock that you can buy, and probably you should see, my expectation is for a 15 to 20% upside from the current levels of around 130. For me, a low risk idea would be HCL Tech, because I think without doubt, if there is one sector that has sort of held and in fact even gained from the whole pandemic situation, then it is IT. HCL Tech in any case was already sort of a stock that I like best among the large cap IT companies, given the fact that their valuations were very attractive. Now that valuation catch-up has been there, but we've also seen that they've upped their guidance. So things seem to be panning out well for HCL Tech going ahead. So this is a stock that I would buy as a low risk idea.
All right, and those are the low risk and the high risk ideas from our experts. For Kunal, it's a buy M&M on a low risk and buy MGL high risk. And for Sharmila, it is a high risk idea is M&M Financial, and the low risk idea is HCL Technologies. Let's shift our focus and let's get on board our queries for today. The first email query is coming in from Sanjay Shetty from Mumbai. He's written to us saying that is it safe to enter Interglobe Aviation at 1,300 rupees? That is the current market price. Kunal, I'll come first to you. Interglobe Aviation, we know what's happening to the entire aviation counter due to this COVID-19. But does it now make sense to enter this particular counter at a current market price?
Well, I think it all depends on the time horizon. I think the answer to this question actually boils down to the time horizon of the investor, because there could be a period where the stock can come back again into extreme bouts of volatility before showing signs of revival again. In the last I would say 2 months particularly, because I think since the entire month of rather than the entire period of March, April, bottoms to July end, the stock had remained very volatile. I think from 850 it had jumped up to 1250, and from 1250 it had come back to almost 900 levels. So I think in that regards the volatility was extremely high for Indigo. It's just that in the last 2 months there is some sense and degree of stability. Maybe the market is expecting that things could probably now try and improve for Indigo. So I think it all depends on the time frame. If you're a long-term investor and want to hold on to it, I think you could probably look to start buying at current levels. But then the stock will be susceptible to extreme bouts of volatility. We've already seen those volatile phase in the last 4-5 months, even when the markets have recovered. So I think even in that phase, the stock has shown that degree of volatility. So if you are ready to absorb that volatility, then I believe Indigo could be a good buy at current levels. And if the stock provides you, a meaningful and a sharper correction, so maybe another 15%, 10-15% correction from current levels could be levels where you look to average, provided your time horizon is long term.
All right, that is Kunal's take on Indigo, saying that if you are a long-term investor, then you can look at buying, but remember that there will be bouts of volatility in the stock, so you need to be very prepared for that. Sharmila, what's your take on Indigo? Considering what's happening with aviation, you have the COVID situation that is not actually kind of even settling down. So what does it mean for aviation, and is it safe to enter Indigo at current market price?
So, I would agree with Kunal on the point that what is the sort of duration of the investment horizon that you had in mind. But having said that, I would still say that probably Indigo would not be the aviation stock of my of choice, really. And precisely as you said, I think the COVID situation is far from satisfactory as in the Indian context. We are seeing a daily increase of almost 1 lakh cases getting added every day. In fact, the last million cases from 40 to current 51 has come in like about 12 days, and it doesn't seem that it's slowing down anytime soon. So first we need to see, that curve flattening or coming down or whatever. So that would at least be a month away. And then given that, one doesn't know how keen people would be to really take up traveling again. So I think the only factor that really goes in favor of aviation stocks as of now is the fact that crude prices are lower. So that has obviously meant lower ATF prices. And let's not forget, I think for Interglobe Aviation, their internal concerns also need to be addressed. That whole ongoing tussle between promoters, etc. So I would really stay away from Interglobe Aviation. If I had to buy an aviation stock, I'd probably buy SpiceJet, but again, not right now. I think you need to see better data of people traveling. Give it a couple of months, and then this could be a sector to look at, but not right.
Okay, thanks for that, Sharmila. The next query is from the line of Rohan Purohit from Chennai. And post the SEBI circular, he is looking at some small cap and mid cap chemical stocks from a long-term point of view. So Kunal, coming to you first, Sudarshan Chemical is up 10% today. It's one of those small cap chemical names, the kind I think that Rohan is referring to. So do you have any charts which are standing out to you at this point in time?
Yeah, a lot of the chemical stocks have been looking exceptional. I think in the last 6 months, 7 months, there have been, sectors, these, not the prime sectors which we keep on talking about, but the sub-sectors which have, started to pick up pace. So chemicals is, of course, one of them. But then again, the question is that, you want to buy the stock, or buy these, set of stocks, then not just, the news flow in terms of, the price momentum sectorally, has been extremely strong. But at a time when, the small cap, mid cap theme is already out in the markets, and, it's not that the fund managers have to adjust to this, kind of a outcome on an immediate basis. There is a lot of window for them to try and buy the stocks and adhere to the changes. So I think in that regards, you'll have to ask a question that are you in a hurry to buy these chemical names? If you are in a hurry to buy chemical names, then I think certain chemicals and such other names from the chemical space could probably look attractive on the charts. But then again, the question is that how eager are you to buy the stock? Whether it's a very short-term oriented call, which you're looking to anticipate, whether it's just a news flow which you want to take benefit of. And I think if that's the case, then I believe that the advantage is already been lost for these stocks on a short-term basis. So you have to be very, very specific with your time horizon and your other integrities in your investment criteria. I think if all of those criteria fulfills and indicates that you look to hold the stock from a long-term perspective, then I believe chemicals should be one basket where you can look to invest even from current levels. And of course, as another stock provides any kind of a meaningful dips or correction.
Okay, thanks for that, Kunal. So I read that pretty loud and clear. These stocks have had a really sharp rally recently, so very careful while investing in them. In the near term, you might see some downside. Sharmila, do you concur with what Kunal is saying, or do you think fundamentally these chemical small caps still have a lot to offer and that one can easily enter at this stage?
Yes, so it's a very interesting conversation that you all have had, and I think I completely agree that why I like the way the investor is thinking, because this is definitely chemicals is a very interesting sector to look at. A while earlier you all were talking of pharma, and I think on the similar lines, perhaps chemicals as a sector is a sector that has sort of come into the limelight because of the entire China situation and people trying to find other suppliers for chemicals outside China as a region, and India will definitely benefit from that. And we have seen it play out in the numbers of certain companies, and the demand for certain chemicals seems to be on the rise, and that's going to be an ongoing situation. But I completely take Kunal's point that I don't think that the SEBI circular should be used as a tipping point, because obviously I think people are trying to work their way around it. So I think that's what it really boils down to, that you need to be a long-term investor. It is a theme that I like for reasons that I explained, that the China factor is playing out in favor of chemicals. I think one interesting stock that you could look at within the space is Deepak Nitrite. Here, they are also like a supplier to agrochemicals, which is another very interesting theme that's playing out in the Indian context. So yes, you need to be long term when you talk of chemicals as a play. But yes, I think there is more steam for the sector as a whole, and there could be a whole host of names within that. One name that I am going with is Deepak.
All right, and those are the calls coming in from Kunal and Sharmila. Let's shift focus to our next query, and that is an email query that we've got from Deepak Diwan from Bangalore. He's saying he wants to invest in KPIT Tech or Tata Elxsi. He is asking for one recommendation. Kunal, if you look at KPIT Tech, the performance has been fairly muted on a YTD basis, but Tata Elxsi has seen a jump of over 50% YTD. So which is a better option to pick up? Do you think there is more steam left for KPIT Tech now to run up?
Well, I think both these stocks are attractive. Now, IT stocks, IT space has been doing extremely well. So you have that sector push, you have that sector trend, which is in your favor. Now you're looking to buy mid-cap names, and I think both these stocks particularly, have been doing well. Now, just the added advantage when I look at the charts for Tata Elxsi is because at the historical patterns for Tata Elxsi. Now I'm talking about the 2012, 13, bottoms to almost 2015, 16, highs. The stock, was at single digits. I think it was at double digits or mid double digits. It was closer to 55 or 60 odd levels, and from there on, the stock had rallied significantly higher to even 1,000 plus kind of a territory. So it was more than 10x kind of a returns the stock had in those period. Now, from 2015 onwards to 2020 so far, the stock has gone through a 5 years of consolidation. So a 10x return, a 5 years of consolidation, classic ingredient and a classic pattern in the making on the long-term basis. So I, for one, believe that purely based on the long-term prospects, the fact that Tata Elxsi has been one of the stocks which have already gone 10x and then gone through 5 years of big broad sideways range, the chances and the probability with Tata Elxsi moving up significantly higher would not be ruled out. But then this is an IT based rally. This is a mega IT rally which you are already looking at. So why restrict it to just one or two names? Why not look at maybe another large cap names? Why not look at maybe an Infosys or even a Wipro, I believe, which is a high potential candidate for a turnaround and for a strong return potential from a long-term basis as well. So I think rather than looking at just one or two names specifically, I think you should try and branch it out further and try and make maximum use of this IT rally.
All right, that's a take coming in from Kunal on the stocks as well as the IT sector on a whole. Sharmila, what's your take? KPIT Tech or Tata Elxsi, which fits better fundamentally?
Yes, I think I completely agree with Kunal again that perhaps the larger cap IT make a compelling case, and I've already recommended HCL Tech as my low risk idea. But to answer the question specifically, to choose between KPIT and Tata Elxsi, I think I'll go with Tata Elxsi. A couple of reasons. I think when you're talking of mid-cap IT in the current context, you need to be sort of what could differentiate between two mid-cap ITs could be the segment that they're focused on, because these are sort of more niche plays than some of the larger cap ITs. So in that sense, I prefer Tata Elxsi. I think their numbers were good. The verticals that they focus on are good. And again, one hears that they are going forward, they're increasing their focus on communications and healthcare as a space, which is very relevant in the current situation. So between the two, I prefer Tata Elxsi. But yes, again, as I said, I completely agree with Kunal's point that in fact, some of the larger cap ITs are trading at better valuation than some of these mid cap ITs. So they are definitely worth considering as well.
Okay, great. So quite some interesting insights coming in there on both Tata Elxsi and KPIT. And with that, I think we are done with the queries bit of our show. But Kunal, Sharmila, thank you so much for joining us this morning. Kunal, before we let you go, your chartbuster, you have some interesting insights that you'd like to share with our viewers. Please carry on.
So yeah, it's on LIC Housing Finance, and I think a very interesting chart on the daily time frame. So we talk about individually how the patterns behave. Now look at the chart over here for LIC Housing. These are typical patterns which you see on the stock price. So if you can look at the concentration on the two broad triangular patterns, and it's an ascending triangular pattern. So ascending is why? Because the bottoms have been on the higher scale. So look at the last 3 attempts towards the bottoms or support of this rising trend line for LIC Housing, and you can see those precision based supports at exactly those trend line levels. Look at the other way down. The moment the stock had broken out, look at the thumping green candle which you had seen for LIC Housing. These are weekly charts for this stock price. So this is an indication that the stock has confirmed a very strong breakout of this ascending triangular pattern. Then there was a retest towards this neckline again, towards this trend line of the pattern again. And now the stock is going through a continuation move. Now these are classical signals, classical signs, which you spot on such a kind of a chart pattern. And I think if this chart has to behave in a very textbook kind of a manner, then I believe that there could be a very strong case of LIC Housing Finance trying to show a very strong rally from here on. So it's more from a medium-term play, but I think the charts are very typical, something which is quite interesting to see, observe, and try and look at from a short to medium-term basis. And I believe that the stock should head towards at least a 350 to 400 kind of a range over the next few weeks and months.
All right, and that was LIC Housing Finance and the Chart Busters segment. Thank you, Kunal, for taking us through the performance of that particular counter, and we should keep an eye on the charts of LIC Housing Finance. On that note, thank you, Kunal, as well as Sharmila, for joining us and resolving viewer queries as well. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side. Welcome back. You're watching Buy Now, Sell On ET Now with me, Cheryl D'Souza, along with Varun Hirimat. And here's a quiz for you. And how well do you know the markets? Can you spot the big trends that's there on the Dalal Street? You need to participate in Dalal Street Trivia on the Twitter. We will be disclosing that answer for you at 11:45 a.m. So let me take you through the question for today. And the question is, if you had bought me exactly 10 years ago, you would have made 48 times on your investment. Who am I? So the options are Astral Poly, Bajaj Finance, Avanti Feeds, and Garware Technical Fibers. So go ahead onto your Twitter page and participate in the D Street trivia. Hopefully, Varun, have you actually gone through these stocks as well for the quiz?
Yeah, Cheryl, I have gone through the quiz and I am aware of the answer. So it's a close race is all I can say. All these stocks have done phenomenally well. So do your research closely. Look at the prices before you make a call. But yeah, 11:45, you'll soon have the answer. Let's surge forward now. My colleague Pankaj is tracking the pharma space very closely. And there's a whole host of interesting developments happening right now as far as Dr. Reddy's go, and then as well as Cipla and Lupin. So he is now with us, and he's going to walk us through the fine print on what exactly has happened. So over to you, Pankaj.
But Dr. Reddy's is a stock which is in focus today, and it's led by upgrades coming in on the EPS front. So the news flow that has come in is an important cancer drug which Dr. Reddy has challenged a patent for has finally reached to a settlement stage with the innovator. What does this essentially mean? That Dr. Reddy post March 22, where some of the other players like Natco and one more global player is there, Dr. Reddy's can also launch this particular drug. Now they have not given the details of any signing, which means if they have got any money or not for this. Also, they have not given any details in terms of market share that they are allowed, but from FY22 March onwards, then going to 26 is when they have this particular selling rights. Now when we talk about this drug, it's a big drug, $7.5 billion in terms of the current size. Yes, there will be 3-4 players, there will be price erosion, but still there is a substantial number that Dr. Reddy can gain, even if it gains about 10 to 15% in terms of market share. Names like Credit Suisse have now reached the new target price around 5,700 odd levels. Similar is the case with BofA Merrill Lynch, close to 5,500 is what they are saying. That their target price will be. BofA Securities has upgraded the stock to a buy from a neutral as well. Important news flow coming in for the inhaler space, and 2 Indian companies are in focus because of that. So Cipla is a company where you're seeing some re-rating event, and Lupin is a company where you're seeing some re-rating and EPS event play out. Now what has happened in an unexpected event is that Perrigo, which of course is another global pharma company, has withdrawn Albuterol for at least CY20, or they have withdrawn this particular drug. Now why this is important for both these companies is currently there are 6 players. It's a $900 million market, and both Cipla and Lupin have recently launched the drug. So Cipla in April, Lupin has just got an approval for Proair, which is of course is also Albuterol, and they will be launching it pretty soon. So what this does is Perrigo, which has about 12% market share, suddenly goes out of the market, and these 2 companies have the opportunity to take it forward from here on to gain the market share. So what happens is that the drug size remains the same. If there are some drug players which goes out, others have the opportunity to gain market share. Also, if anybody thought that there would be price correction into this drug, that is something which will not happen. Now fortnightly you get the prescription data which comes in, so that will be an important one to track for both these companies, who is gaining what, who is gaining how much. Remember, Cipla already has a 10% plus sort of a market share. Lupin has just launched this, but their drug seems to be quite complex and promising, so that what sort of market share they get because of this will also be quite important. Brokerages have given it as a one-time opportunity, upgraded the EPS by 4 to 6 odd % for both these companies, citing that if there is a delay by Perrigo to relaunch this drug in 21, it could lead to further upside for these large names.
All right, thank you, Pankaj, for taking us through what's actually leading the buzz in Dr. Reddy's as well as Cipla and Lupin. And these are not the only 2 stocks in the pharma sector that are surging. There's also Cadila Healthcare. Reports are suggesting that Cadila has gotten US FDA approval for potassium chloride tablets. And apart from that, you have also newspaper reports suggesting that Zydus is in talks with Russian Direct Investment Fund for Sputnik 5 vaccine. That's a similar one. That's the same one that Dr. Reddy's also has a tie-up with RDIF as well. So based on that news, you're seeing a smart up move coming in on Cadila at 7-week high. It's at its high, I beg your pardon, it's gained most in 7 weeks, and it is at its highest levels since September 2018. Apart from that, you have Natco Pharma as well that is surging in trade. Sources have told agencies that they are expecting Natco Pharma US launch of Revlimid generic to be before Dr. Reddy's. On back of that particular news, you can look at the stock price of Natco Pharma. It's up over almost 20% in trade. Let's now move on and let's talk some more about pharma. And earlier in the day, we spoke to the pharma bull, Ravi Dharamshi, the CIO at Value Quest Investment, to get his insight on the sector. Listen in to what he had to say.
Just like you said, the context, what the whole market looks like. Stock prices rally, good news follow, stock prices rally some more. And we keep building on the base, we keep building on what has happened, transpired earlier. So this started as an undervaluation, under-allocation story, quickly graduated to US generic revival and reducing regulatory issues, with an opportunity thrown in with most of the corporates around the world adopting China plus one strategy. Now the story has moved on to the next phase where suddenly drug shortages are developing and there are limited competition opportunities suddenly coming up, and Indian players who are well positioned to take advantage of this opportunities, which were optionalities till now, are suddenly materializing. So, as you rightly pointed out, not even 2 years. I would say even a year back, people were not willing to look at this space, and suddenly now, analysts are behind the curve, and we are in an upgrade cycle. They will constantly be in an upgrade cycle for the foreseeable future, is what I believe.
Okay. What, to your mind, is the right P multiple for pharma? Because every company has a different sectoral growth. Unlike IT, I'm just bringing a point out, Ravi, for our viewers there, where if TCS will do well, other companies will also do well, plus minus 1 or 2%. That's not the case in pharma. So how does one go about judging individual stocks? Because every company has a different factor. And what is the right P multiple, the threshold P multiple for pharma now?
Nikunj, we should not get fixated on a number. That will actually act like an anchor, and you will be left out of the opportunity. I empathize with the analysts, but I don't sympathize with them. Unfortunately, they are trapped in an institutional imperative, or you should not get trapped in an imperative that I will buy at 10 multiple and sell at 20 multiple. That is not how the real world works. We work in an uncertain...
Okay. Earlier in the day, we also spoke to market veteran Jinesh Gopani, who hailed pharma as a good stock sector from an EPS point of view. Let's listen in.
After this COVID episode and the way US FDA has started giving approvals for some of the products which are short in supply, I think near term, the issues around US FDA not allowing plants to run has gone away. And also there has been a lot of approvals which were pending for last, let's say, 6 to 12 months has suddenly got approvals. And again, I would say pharma is a very stock-specific story. Different companies have different ANDAs, different product pipelines, different chemistries. And hence, it should be looked from that point of view. But nevertheless, it has been a good sector, both, as you rightly said, from the EPS upgrade point of view and also the re-rating, because it was I would say, underweight pre-COVID. When others were overweight on the financials and the other sector.
Okay, on to another very important development. We have my colleague Ruchi Bhatia on the phone with us now. It seems that the Maharishi panel is recommending removal of moratorium interest. Hi Ruchi, what exactly is the recommendation? Are they seriously going to waive off interest on the Morat loans?
Well, important to note that the 3-member panel that was headed by the former CAG, Rajiv Maharishi, their 7-day period, in fact, comes to an end. We're given to understand that the panel will be submitting their report to the government anytime now and may recommend removal of interest on interest. Varun, which is actually compound interest on loan moratorium. We are given to understand that there are estimates of anywhere between 15,000 to 20,000 crore rupees in terms of the total amount that the waiver of interest on interest may cost. We're given to understand that the government is likely to submit the recommendations of the Maharishi panel in the Apex Court when the next hearing happens. Having said that, the Maharishi panel had sought the views from banks as well as IBA on the economic impact of the removal of interest and also the economic impact of the removal of interest on interest or compound interest on loan moratorium. We are given to understand that the banks and IBA both have suggested that the panel can look at a waiver of interest on interest, which is going to, amount to close to 15 to 20,000 crore rupees. However, the waiver of interest should be treated as a debt waiver for banks because remember, banking is a commercial activity and the cost should not be borne by the banks. In fact, banks and IBA have suggested that the cost should be borne by the sovereign instead. So the government, in fact, we're given to understand, will now look at what needs to be done in terms of the way forward, the kind of submissions that they will now be making in the Apex Court. Remember, the Apex Court in their last hearing had given a 2 weeks' time to the government as well as the RBI to find a way forward. They had said that they were inclined to rule in favor of the petitioners in this case. Having said that, the government as well as the RBI seem to be on the back foot with respect to this issue, and needs to be seen what kind of a middle ground or middle path will be suggested. We're given to understand, as I said, the Maharishi panel is inclined to suggest that the compound interest should be waived off on loan moratorium.
Ruchi, for joining us and giving us that exclusive details on what are the Maharishi panel's recommendation. Let's shift focus now and let's talk about the IT sector. And Morgan Stanley is bullish on the IT sector. My colleague Poonam is here to take us through the rationale behind it. Poonam, good morning. And what is Morgan Stanley saying about the IT sector?
Well, bullish reports continue to pour in for the entire IT space. In fact, Morgan Stanley has stated that faster demand recovery has led them to revise their earnings estimates and revenue estimates upwards and also revise the target prices upwards for the IT bag. In fact, they state that the HCL Tech mid-quarter update revising the revenue and the EBIT margin guidance is likely to lead to a positive surprise on the revenue growth for most of the IT companies, and they believe that the incremental demand environment is certainly improving and that could support the overall growth recovery and could also lead to lifting of the multiples for the large IT companies along with the potential for them to re-rate. In fact, Morgan Stanley states that they are overweight on Infosys, HCL Technologies and Tech Mahindra, and between these three companies itself, they do prefer, their preference is Tech Mahindra over HCL Tech and over Infosys as well. They're stating that the spending led by digital transformation is likely to support growth, and that should also lead to a re-rating going ahead, and the P multiples for some of the IT companies are likely to stay higher than the 5-year average. CLSA also in the report has stated that Infosys and HCL Tech remain their top bottom-up sector picks, and they do see incremental upside coming in for the IT sector. However, they expect only stock specific moves, so watch out for this entire IT space upgrades coming in.
Okay, thanks for that, Poonam. Now, before we go into break, coming back to the BNSN quiz for today, the question we asked you was which of these companies had possibly given you a 48x return in the last 10 years. So if you had bought me exactly 10 years ago, you would have made a 48x investment, 48x on your investment. Who am I? Astral Poly, Bajaj Finance, Avanti Feeds, or Garware Technical Fibers? Well, the answer to this one is Astral Polytechnic. And exactly 10 years ago today, on the 16th of September, if you looked at the price of Astral Poly, it was 24 rupees. Today, that stands at a whopping 1,156 rupees. And that makes it our winner of this morning's BNSN Quiz Connect. So if you did manage to get that very difficult question correct, your name might actually be flashing on the screen right now. If we don't have any winners today, understandably so, it wasn't the most straightforward of questions. But we'll keep these coming every day, and at times they will be challenging, so don't lose heart, and we hope that you keep tweeting to us and keep making your best attempt at these questions. On that note, let's slip into a quick break here on Buy Now, Sell Now. Plenty lined up, don't go anywhere. Welcome back to Buy Now, Sell Now. In a very interesting conversation Mubina had yesterday, the Nifty 50 ETF's asset base has crossed the 1 lakh crore mark. a 26x surge in the last 5 years alone. So what's lending ETFs their popularity? How much should you invest in them? Dilshad Bilamoria of Dilzer Consultants shares how they pitch against actively managed funds and how much of your money should be invested in them. Listen in.
Investing is really taking on very well. It's really actually moved on in the US very well and overseas market, and it has moved up as well in India. The good thing is that when it's an index based, you don't really need the active fund management expertise of a fund manager. So you would be buying the underlying index. So if it's a bank ETF, you would be buying the underlying bank, Nifty, the bank stock index, or if it's a Nifty based, you buy a Nifty based underlying. The only issue is the tracking error, which most of the fund managers try to minimize as much as possible. Having said that, there is definitely more active interest towards passive investing because the costs are much lower, and investors are actually earning better returns because of lower fund management charges as well.
So how should, like you mentioned, it's been like a worldwide debate, right? Active versus passively managed funds. How should an investor, a retail investor, essentially decide how much of what fund to take? There are definitely more in the actively managed space than there are in the passively managed space. But yeah, do you advise that there should be a certain percentage of, one's mutual fund portfolio that should be kept aside for ETFs, whether in equity or in debt?
Yes, absolutely. I think going forward, there are people who are realizing that, active fund management is sometimes not doing as well as passive fund management. And definitely as part of one's asset allocation, it's important to have both active and passive strategies. It's important to diversify across sectors, across industries, across geography. And you might get some of the best opportunities overseas in international markets by investing in ETFs. You get some of the best options in India as well by investing in ETFs. So, you're getting the best of both worlds in terms of asset allocation, diversification, and low cost. All
right, shifting focus now. The founder of Abacus Asset Management, Sunil Singhania, spoke to ET Now and revealed his mantra to get rich. Listen in to what he shares with us.
I don't know what the definition of rich is. If you mean rich in money terms, and if you're looking at trading and punting to get rich, I think I would not advise that. If you're looking at decent double-digit to mid-teen kind of returns, I would say that Indian equities still have the potential of doing it. And we have seen that last 3-4 years have been a little bit of a challenge. But to some extent, this last 6 months have recovered underperformance. So you are back to at least making as much money as you are making in fixed deposits. Going forward, the assumption is that we have had 2-3 years of really challenging economy. Now we are having some tailwind. Money is available in plenty. Our foreign exchange reserves are at an all-time high. China has become the villain of the world, which means that sourcing from other countries into countries like India will increase. India and China are having issues, and that means that the government also wants to move away from importing from China, and that means supporting the domestic economy. So all those are in place. We need a little bit of push from the government and a little bit of luck. And I think we are going to head to, again, a GDP growth of 6 to 7% and an earnings growth upwards of 10-12% on a consistent basis. So, if you are contented with doubling your money in 5-6 years, and that is what is called rich, then equity investment is all about it. If you want to get rich overnight, maybe you'll have to go to a technical analyst or do something else.
Okay, on that very important note, completely out of time here in BNSN. Bye from me and Cheryl. Thank you so much for tuning in.